Dickey here, and I've been having a lot of clients call me and have questions in reference to whether the Fed is between a rock and a hard place today and what they're doing. And just to give you a little example, here's some of the things that are on the news, and this is what I get calls for on some of my clients because they see this stuff online, they hear this stuff on television, and this is what their question is because you have all of these experts out there saying basically conflicting information because you've got these guys saying is the Fed is between a rock and a hard place, and then when you listen to the guy, and I want you to listen here real quick to what he's actually saying.
The messaging, is it a dovish hike? Is it a hawkish hold? It's really about the messaging around the market's already pricing in 25 basis point hikes.
But he's saying that the market's priced in at quarter basis point. Really? Where is it priced in at? Can you show it to me on the screen? Can you show me where they've actually said, okay, I've put this in here? And all the investors out there, they sit down and they go, yeah, okay, I've priced in a quarter point deal. So what he's trying to say here, and we'll listen to him a little bit more, is that it's really not between a rock and a hard place, but it is. So listen.
25 basis point hikes, so the path of least resistance is to deliver the hike and then to control the messaging around this. And I think that's what they're going to focus on. So we have a 25 basis point hike, and then we say, look, guys, from here on out, we're going to observe exactly how financial conditions evolve in the next few months.
Okay, so here's my question. Have they not just been saying this the whole time? Go back and listen to all the other Powell speeches. He says it every freaking time. He's going to be data dependent. He's going to look at the data. He's going to look at the data. And here he's saying we'll do it again. And all my clients who've heard me talk about this, you've heard me say it over and over and over again. It's not about what Powell says. It's not even about what he cuts or raises or does any of this stuff. It's all about how the market takes it, okay? Again, he can say it's all priced in. Powell can come out and say the same thing that he's been continuing to say the entire time, and the market may take it completely different and sell it off. He may do it completely perfectly, and the market may sell off. It has nothing to do with it. Now, here's the next one I want to talk about. So that's this headline. The Fed is between a rock and a hard place. Okay, so now here's another headline. So he's saying Powell's statement is more important than the rate decision. Gee, kind of the other guy just said the same thing, but that puts him between a rock and a hard place. Let's listen to this guy.
Tomorrow. On balance, I think given how the market is priced right now, as I saw somebody describe it as, they have a bit of a free hit with a 25 basis point move. But I think their statement is probably more important than whether it's 25 or 0, because if they sound...
Okay, so now we got two guys who seem to think the statement is far more important than what he does. Now we've got another guy...
Because what's happened in the U.S. and in Switzerland is really a great concern for international investors, particularly the big investors who trust the big banks and who think money will be safe. So there's really a lot of concern about that, which I think is why gold has gone up a little bit. And
okay, so this gentleman is more concerned about him raising another 0.25% and it affecting everything. Now, the reason I'm doing this is I'm just trying to put this out there for everybody. And again, I'm trying to cut through all the BS so people can actually understand what's going on here. And the thing is, and you can look on the sideline here, there's all sorts of different people looking at different things up and down and saying different things and having questions and different opinions on what's going to happen with this. And nobody really knows. First of all, nobody knows what Powell's going to do and how the market's going to react to what he does. Because again, a lot of it's about what he says and how he says it. And basically everybody's going to interpret what it is. Now, what I want to nail this down to is really quite simple. If you honestly think that the banking system is in trouble, then that's one thing. And that's what he's trying to say. Now, again, look at my other videos. Now, what Mark Mobius is trying to talk about is that on a short-term basis, with interest rates high and staying higher or going higher, is a problem when you look at a portfolio. And I've said this and I'll continue to say it, and I've got charts that can show this better than what I'm going to say today. But if last year you put $100,000 into a T-bill at 1%, and today that same T-bill is 5%, the $100,000 is not worth what it was a year ago if you sold it today. Now, if you hold it to maturity, you get your $100,000 back. But if you sold it today, you might only get 40 grand. So on paper, these banks look like they're out of whack and that they've done something stupid, okay? But It doesn't look good on a piece of paper as interest rates are going up. So he's not wrong in that regard. But it should not, and as I'm saying, should not affect the overall solvency in the banking system worldwide. But our market does affect the world. So what Powell doesn't just affect the United States, it affects everybody. But the thing to look at here is Powell's trying to do two things. He is not as concerned with the stock market as he is with unemployment and interest rate. Now, he will be concerned about the overall stability of the financial systems. But the overall financial systems and the stock market are two different things. So keep that in mind. Just because the stock market goes down does not mean that the banking system and the financial systems are a problem. Now, whether or not Powell's backed into a corner, he's only going to be backed into a corner if he allows himself to be backed into a corner with what he says. It is not relevant to the scheme of things if he raises a quarter today. As I've said in my other videos, personally, if he raises a quarter today, he will be done. And the reason he will be done, and I'm going to show this, and I'm going to keep showing this till everybody understands this stuff and gets it through everybody's head, because this is a different world than anything else. I'm going to move this up here so I'm not in the way. This is the federal funds rate for its history, folks. Here is where we are at today. Now, I want you to look at the 90s. We are still below the whole decade of the 90s. Now, most of us are old enough to remember the 90s. Some of us may not remember the 80s or the 70s and going on back. But look at the 90s and the early 2000s. We're not even up to where we were there. The economy grew just fine in the 90s. There wasn't a problem. Now, we are higher than we were, over the last decade, for sure. But we're barely getting up to normal right now in the history of things. So everybody makes it sound like the world's just going to end. No, it's not going to end. We're going to get to a new normal. The markets will figure it out and they'll handle it. The biggest issue is, as we continue, this is inflation. And when you look at inflation, it's really quite simple. Since June, inflation has continued to come down. The relationship between gasoline and inflation is quite simple. Last year, gas up for the first 3 months, inflation up for the first 3 months. The next month it went down because guess what? Gas prices went down. Then they went back up and peaked here. They peaked with inflation. What I want to focus on is what is reality. All this other stuff is conjecture. They're all going to make up their minds what's going to happen, whatever. The market could actually go up 300 points this afternoon on the Dow and tomorrow drop it all back. It's been very finicky and it's been very up and down, which is, again, not normal. But since COVID, it hasn't been normal. It's not typical to have 1% moves every day in the market. It's just not. But that's what we've been having, okay? So reality is, even though that's not the historical norm, it's the reality we live in. But I want you to look at this. In January, gas prices were up just a smidge. But inflation continued to go down. It went from 6.5, this is the annual for the whole year, this is December, went down 0.1%, even though gas prices were up a little bit. That is a positive sign for inflation. And you can bring in all the other baloney numbers you want as far as whether it's a core or services or whatever other numbers you want to come up with. That's the number right there. Now, last month it went down from 3.6 to 3.5, so 10 cents a gallon roughly. But inflation dropped 0.4%. It went from 6.4 to 6. And that's not with a big drop. Look at next month, or the month we're actually in right now. We're going to be finishing. It was $4.30 a gallon last year in March. We're around 3.4, 3.5 right now. That is a significant decline. And I'm just going to say 4.322 minus 3.5, we'll say, divided by 4.322, it's a 19% decrease year over year. I'm telling you, if we went down with less than a percent last month, 0.4%, how much are we going to go down next month? What I'm going to find interesting about this is not what actually is happening today. Because Powell's not in a corner. He's already won this battle. Look at these numbers. Gas prices are just so high, we're not even close to those numbers. So it's going to be a really push down on inflation numbers. So the inflation number is going to come down dramatically. What'll be interesting is if we do this quarter point, and with all the banking stuff that's going on, is the market just going to look at it and say, well, hey, it was just what we just happened here. This didn't just happen. This is what's going on. He didn't have anything to do with this. Powell has had nothing to do with gas prices being down here, and he's going to have nothing to do with what happens in the short term, in the next few months, when we get down to 3.5%, 4%. Now, to get below 3.5%, 4% is going to be another issue. And I think anybody you listen to and you see on here is going to be the question. So this has nothing to do with today. Today might be a short-term blip up or down depending on what he does. He is not between a rock and a hard place. I'm happy to hear that basically the 0.5% is off the table. And it should be off the table. As most economists and most of us that actually run numbers, look at the numbers and look at the statistics like I'm showing you here, we all see inflation coming down dramatically. The question is, how much damage have we done, and are we doing with interest rates being higher for longer, as they keep saying, in the scheme of things? And we don't know the answer to that yet, which is why most of us have been telling him to pause, not cut, pause and see what has happened with what he's already done. I'm telling you, when you start seeing inflation drop dramatically over the next couple of months, it's going to be really hard for anybody to sit back and say we should be continuing to raise interest rates. Now, I do not expect him to come out today and say he's going to raise it a quarter and pause. That would be a foolish move on his part. I don't think it's the right choice to say that. I've said for a long time I don't think he should be continuing to raise. At this point, I think he should. And the reason I think he should is I think most people think he's backed into a corner, and I do think there are people out there that will take it negatively if he doesn't raise here. But I think he needs to make a very stern point, since we don't seem to get it. As I've shown in the other videos, nobody seems to listen to what he says, that he's actually going to be data dependent. He needs to make that very clear today, because we don't know if there's another SVB. We don't know if there's another signature. Or we don't know if there's another problem coming down the horizon. And he may see it. We don't see it, okay? And there might be another one out there. Now, again, is this, in my opinion, going to be systemic? I don't think so. Simply because of what I've talked about, the fact that there's so many depositors out there, the run on the larger banks would have to be, again, this is not a problem with having assets that are a problem. This is a liquidity issue, and most of those banks have far bigger liquidity than anybody else, which is why you're seeing some of the regional banks lose a bunch of assets and everybody's taking their money to the larger banks because, their liquidity is in a better situation. But if something else continues to happen and can rattle the market, that's what I think he needs to say. Now, will he say that? I don't know. And the question is, how does the market take that? Because if he comes out and says, hey, we're going to be really data dependent, we're going to want to make sure that this is that, I'd like it if he would actually come out and say that he's going to pause without saying he's going to pause. And that might be interesting, because I'd like to see the market say that. But it doesn't really matter, because it's over. Inflation's going to come down dramatically. The question, and most of us have continued to say this for the last several months, the question is, do we really try to push down to 2%? And how big of a deal is that? But I think most of us can live with 3.5%, maybe even 4% inflation, because, again, the historical norm for the United States is 3.8%. And heaven's sakes, we've lived with it for 200 some years. I'm sure we can live with it for a little bit longer. And I don't know that 2% is the right number, because 2% includes wages. And when I look at the numbers, and I'm going to pull this up here, and this is just my 2 cents worth, so take it for what you wish. When you look at the last decade or so, and let's just go back to 2009, look at the time before that, 3.8, 2.8, 3.2, 3.4, 2.7, 2.3, 2.8, 3.4. Again, we're not hitting 2% every year, and I don't remember this part of the time frame being a problem. But when I look at 2009, and I start going negative, 1.6, there's a 3, there's a 2.1, 1.5, 1.6, 0, 1.3, 2.1, 2.2. Basically, we've got a decade. And for that decade, you're looking at a 1.7%. And one of the biggest complaints we had during that decade was that wages weren't keeping up. Gee, I wonder why. If inflation's only at 1.7%, and that includes wages aren't going anywhere. Now they're going up. So maybe we need a better balance in there, and maybe the right answer isn't a 2%. Maybe it is 3%, which again, it's a little lower than the norm, and maybe that should be the focus, is to get that down a little better than the 3.8. But maybe it shouldn't have to be 2. But whether we get down to that or not isn't relevant. What happens today, on a daily basis might be an issue. We might have a spike, we might have a drop. But long term, I don't see this being a problem with what Powell's doing. I don't think they're backed into a corner. I don't think it has to be such a big deal. Now, again, the market may make it that way, and that's their problem, because I think you're going to have the Fed come out today, and whether he raises a quarter or goes zero, I don't think there's going to be any major statements. But the market may take it that way. So the biggest issue this afternoon, what you want to look at, and what I'm looking at, is how does the market react to what Powell says? Not what he says. What the question is how does the market react to it? So if you have any questions, contact your financial advisor, sit down, make a good plan. The biggest thing is don't freak out about a one-day event. And it's not going to it shouldn't have a long-term effect on anything, barring something we're not seeing here. But if it's literally just, hey, is he going to do a 0.25% or is he doing zero? And what he says, again, listen, take it in, listen to what he has to say. Because, again, sometimes there's some nuances in what he says, but generally speaking, I expect him to say the same thing. What I am hoping for is that he'll come out and say, hey, we're going to be very data dependent. And what I'd like to really hear him say is that some of the data has become more to what they were looking for. Because in the past, he has made some comments that the economy has held up very strong, which it has. That's a concerning factor when he's looking at whether inflation will come down. And again, when he says that, he's not trying to say that it has to become a problem. He's not saying that the economy has to go into the toilet. He's not saying that employment has to go into the toilet. What he's saying is that if these things continue, it might make his job harder to get inflation down. Again, we don't know the answer to that because inflation has been continuing to come down. And again, for those that haven't seen my other videos, what I want you to look on here, and this is, to me, the biggest issue. Depending on where you want to start, whether you want to start back here because you've had inflation in this time frame, but if you really want to go crazy with it, you can go back here and say that inflation started at 0.3 and it took over 2 years to get to 9.1. It's not coming down in a month. It's going to take 16 months or so, give or take. Again, I'm not giving a specific number, but it's going to take time for it to come down. And as long as these numbers are continuing to come down and not going back up, we're going in the right direction. Again, it didn't go up in a day. It's not coming down in a day. So keep that in mind. On television, you just hear it every day. They beat it over your head. Inflation is too high. It's too high. It's too high. I get it. It is too high. But it was too low for a long period of time. It took a long time to get up there. It's going to take a long time to get back down. Set your expectations that it's going to take some time to come back down. But you're also seeing the market turn around and in anticipation of this. Again, I'm not saying to get in, get out, whatever. I am telling you, talk to your financial advisor. Stick to your long-term plan because normally long-term plans are the best ways to be. Don't try to day trade it. Stick with your plan. I want to make sure that every one of you can retire when you want to retire and how you want to retire. So talk to your financial advisor. Set things down and make it work for yourself in your plan. Not mine, not Powell's time, not any of these other guys on television. Figure out what's best for you and find a way to make that happen. Dickey out.